Hello traders, this is day number 63 of small cap market open test trading. We've taken 76 trades so far. 2 of those trades were today. Our plan is proving profitable so far, but we need to take it to 100 trades before we decide if it is or not and if we go full position size on it. So far, all signs are pointing to yes, but there will be some minor changes that will need to be made once the test is done. I'll talk about those in the video. I'm also going to show you my spreadsheet and why it's so important to track a lot of data and a lot of statistics, because you could get into a red streak. Right now, we are in a 4-trade red streak. The last 4 trades we took, they all stopped us out. Does that mean that we're doing something wrong? Does that mean we need to change something? Absolutely not, and I'm going to show you the proof of that on the spreadsheet. In fact, if we were holding all of our trades to 3R, which is something we've talked about many times, that's something we're tracking on the spreadsheet, we would still be green this week despite all of those 4 trades that lost, the last 4 trades I should say, and I'll show you all of that proof in just a moment. So let's get to the video and look at the trade that I took this morning so you can see that it's 9:30, just past the open here. And at first I'm just looking at my screener on my laptop, so you can't see that, but I'll show you it in just a moment. And I'm picking out these stocks that meet my screener criteria, which is all written in detail in my trading plan. And LLNW is the one that's looking the best at the open, and that's the one that we end up trading because it triggers our entry first. So you can see these other stocks are nowhere near their previous high, and LLNW is, and I put my white line out there ahead of time. That's to mark out the second high of day after breaking out through the previous session. And that is basically a reminder not to enter until that level is established. And there it is established. It's only 1 cent higher than this one, but that's happened a lot before and the trades have worked out. So that's nothing to stop us. The criteria for taking entries is very well defined in the plan, and that's all we do. We don't worry about the minutia of what's going on. Oh, it's only 1 cent higher, or it's 25 cents higher. We don't worry about that stuff. We just follow the strategy and take the entry as the plan tells us, and that's what we did here. And we have our stop loss in place. Our profit target is in place, or just about to be in place, and then we're done with the trade. We just let the trade play out. We don't care what happens. I'm not concerned that this is a huge topping tail or anything like that. This is the 1-minute chart. Pardon me here, I'm opening up my calculator because I had the Excel spreadsheet open, but I didn't activate the calculator. But yeah, so this is a 1-minute chart. You know, you expect a lot of noise, but we're using the 1-minute chart for our entry and our stop loss. Why? Because it's lower risk, and I'm trying to present a plan that's going to provide new traders a low risk opportunity to take a lot of trades, collect a lot of data, and learn how to day trade. So that's what we're doing, and we're in the trade. Let's see what happens. I already gave it away at the beginning of the video. So we got stopped out there as this thing comes down, but I was switching through time frames when it happened. So there I am on the 5-minute chart. And when I switch back to the 1-minute chart, that's when our stop loss gets filled. But not a big deal. We got filled exactly where we want to. We lost like 5 cents on that trade because we're just trading one single share as we collect data. Once we get to 100 trades, then we'll go full position size. So now what's next? The second entry is about to be triggered. It's as soon as a 1-minute candle makes a new high, as long as the stock has not fallen below what I define as its moment of weakness. So it's still up and showing strength. So as soon as a 1-minute candle makes a new high, we get back in. I'm looking for 504. It's going to happen here in just a moment. Let's see. Let me fast forward just a little bit. Okay, back it up. So it should be just, okay, right there. So there was 504, and then you saw me trigger my hotkeys, and I'm in. And again, moving the stop loss up into the appropriate position right away. That's super crucial because sometimes these stocks are very volatile, and they can flush down on you very quickly and cause you to take a much bigger loss than you should take. So now, again, we're risking 5 cents. So our profit target is at 10 cents above our position. And again, even though the math is easy there, just like to get in the habit of using the calculator and just improve my skills on that, because when you're trading like weird prices, higher price stocks, the math can get kind of weird and well, not weird, but you know, when you're under stress and pressure, it's very easy to make a simple arithmetic mistake. So it's much easier just to rely on the calculator. So again, we're in the trade. This is trade number 2. We're allowed to take up to 3 trades per day as long as the price doesn't come down below this level and 1030 doesn't hit. So this ends up being the last trade of the day, trade number 2, because When we get stopped out of this trade, it's right around 10:30. So let's fast forward and just watch this trade play out. You can see the price going up toward our profit target, and here we are at like 512. But even though the price is near the profit target, we still don't want to pull the profit target down. That's such a bad habit to get into. It's 1 cent away at this point. It could even go to 514 theoretically and not fill us, because the bid needs to come up to 514 to get filled, and there needs to be enough shares if someone else is ahead of us in line, so to speak. So anyway, we cannot get in that habit because we're going to screw up all of our data. All of the data that we've been tracking so far is based on sticking to the plan 100% of the time. If we stop doing that now, the data is totally destroyed. So here we go. It's waiting for the stock to stop us out. It does reverse here for a moment, and then I think it stops us out. And you're going to see it's right around 10:30. Like, notice the time down here on the right-hand corner. If it's 10:30 or later, I can't take the next trade no matter what. And there we go. We get stopped out, and it is now 10:30. So I'm all done trading for the day. It was a minus 2-hour day. Let's take a look at the spreadsheet, and I'll show you why it doesn't matter that we lost the last 4 trades in a row. So here's our trading week. Here's March 7th. Today's March 11th, and we had 2 green days, 2 red days. If we were holding till 3R, which we've been talking about a lot, we would still be green overall on the week. And since we're only holding the 2R, we're actually, let's see, so that's 6 green and then minus 1, 2, 3, 4, 5. Oh, sorry, not 6 green. That'd be if we were holding 2R. So 4 green. So we'd be down minus 1R, with the 2R, and we'd be up 1R with 3R. So either way, not a big, kind of a break-even week overall. So it's not anything to be alarmed about. If you're tracking your statistics in the long term, that's what matters. We've taken 76 trades so far, so we're not worried about these 5 or 6 trades that we took this week, because we know that if we were trading even this plan as is, if we didn't make any error trades, we'd be up 4R. With our errors, we're only up 1R. But if we're holding the 3R, which again, we talk about over and over again, that's what we're going to do when this thing is over, we would be up 14R. Now, we can still improve the plan even more than that by skipping that first trade, because we know that first trade only works out 25% of the time, which is break even for 3R. So it's something, we can play around with as we collect the next 24 trades. If this number goes up a little bit, we could still keep it as long as we're holding till 3R. But our 2R win rate without the first trade is up 13R. 3R win rate without the first trade is up 20R compared to 14R over here. So we can see that this plan clearly works with some slight modifications, which will not be made until we're done collecting all the data. We have to keep it the same for these 100 trades, otherwise we're going to skew the data. So that's why I just keep doing the same thing over and over. But yeah, just to give you kind of a broad view of this spreadsheet and why it's so important to look at the data as a whole and not focus in on any one specific area. I mean, look how much red is in certain places of this spreadsheet, and you would just think, wow, there's no way this plan is profitable, there's no way this thing works, whatever you're doing, you've got to change it. Well, my data proves otherwise. Even if I don't change a thing, I'm still not losing money on this plan. And if we just change a couple of things, we're making a lot more money on this plan as is written. So this is trading the plan the exact same way, just skipping the first trade gives us these results. If we don't change a thing and just hold till 3R, we're up 14R. So that's the power of collecting a lot of data and not focusing in on just a few trades or 1 week or even 1 month. I think this month by month data collection and comparing 1 month to the previous month is not helpful. You need to be looking at 100 trade blocks. There's a statistical reason behind that. If you know anything about statistics, which I know not a lot of people do, not a lot of people like math, but in statistics, they look at 100 test sample sizes in order to figure out if something is true or not. Because if you go from, say, 0 to 10, there can be a huge variation as you increase the test sample size up to 50 and then up to 100, it starts to stabilize. After you go from 100 to 1,000, there's very small difference. But in that first kind of group of 100 tests, there could be streaks. I always use the coin toss test as my example, we all know that a coin has a 50% probability of coming up heads or tails. Well, if you do the experiment yourself and you start tossing the coin and tracking how many heads versus tails you get, for those first few tosses, you could get 3 or 4 heads in a row, 3 or 4 tails in a row. Well, you can get that throughout the test. But if you just say track the first 10 tosses, you might come up with like a 33 to 66% head versus tail ratio or something like that. And you say, wow, is this coin bad? Well, if you just keep tossing it up to 100 tosses, you'll get very close to that 50% probability of heads versus tails. If you don't believe me, try it out yourself. All right, guys, hopefully this video was helpful to you. I know there was a lot. Let me know if you have any questions about anything I said in the comment section below. This does seem like a lot. It does seem complicated, but believe it or not, this is a very simple plan. It's just tracking it and proving it. That part is a bit complicated, but it's what we got to do to learn if the plan works or not. It's not enough just to see week by week, month by month. So anyway, that's my spiel. Again, hopefully this was helpful to you. Hit the like button if you haven't done so already. Subscribe. And as always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Last thing, if you are interested in this day trading plan, my spreadsheet, or any other, like my calculators, any other my trading tools, they're all available on patreon.com/tradingarmor. There will be a link in the description. And thanks for watching. Take care.